All right, all right, all right, all right. Early in the morning, 8:14. I would have had this out already, but dealing with that internet. So I am um I'm in safe harbor, and I'm off the water. Still on the hook, off grid. So I have internet issues, which I'm trying to resolve, but we'll work it out. Hopefully you enjoy that little inconsistency or my idiosyncrasies. All right, so very simply, today is non-farm payroll. Yesterday we had some clarity with the Fed. No, that was Wednesday. We had some clarity with the Fed. We had to move up in the market. Uh, 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 Smaller than expected jobless claims, which is good. People are getting back to work. But today is non-farm. And non-farm payroll shows you how much payroll grows. And if payroll's growing, then people are working. If people are working, people are spending. If people are spending, companies are earning. And if companies are earning, our economy is growing. And if our economy is growing and companies are earning, then companies are employing, which ultimately reduces new jobless claims and increases payroll. Such is the cycle of life. What we're looking at, though, we're looking at a stock market that's up, I think, 14 to 15 days out of the last 16 days. Here's a nice little consolidation right here. We could use another one of those bad boys, hopefully today. That makes you weary, and you kind of wonder where the steam runs out. So you keep your eye on things. And me, I like to look at the momentum and how that's tracking. The market's ripping, and the momentum is just gaining and pushing up. And we could just argue that there's really no exhaustion sign in sight for the market. So the other thing we're going to look at is oh, why is this dancing around? Let's hope we could look at it, because we still have issues. I don't even see it. It's gone. There it is, and it's not loaded. So we could look at the 10-year. We could if we can get the data. Data. I can't even get on it. No, won't even hop over. So we could look at the 10-year, and the 10-year should be raising with the market. That means that people are coming out of bonds, going into the stock market. It's not the case. I mean, it's going to nail down some text, but it will show confidence in the market. And I can't quite get the data up to demonstrate that. So maybe if you stop in later today, we'll be streaming at 9:30. If you stop in, we can check that out, and we can go through that together. So you look at the 10-year. You want to see the 10 years just start inching up. So it's been inching down, which means that somebody out there is buying bonds, forcing the price up. So you got to wonder if there are people out there a little conservative or suspicious of the market performance. The other thing we'll look at over the next few weeks is the VIX. We're going to watch the VIX, and we're going to see how the VIX behaves. Because if the VIX rises with the market, then there's definitely some skepticism on the stock market. So this will be our plan of action, provided we have the appropriate data. So we're going to cut it off here. Remember, if you're feeling anxious and got a lot of anxiety, you're probably not doing the appropriate risk management. So when you're trading, you got to be calm and cool. I recommend everybody do a little meditation before the market open. Be at peace with you when you trade, and good luck trading.